Hello everyone, I'm Kate Hill and welcome to the Adviseable Advantage Property News Update. Before we get started, please subscribe to our YouTube channel and hit that notification bell so that you don't miss out on further news updates, on suburb analysis reports and our free webinars. Don't forget that we at Adviseable are out there every day looking at property, analysing property, buying property. We are at the coalface of what is really going on out there. We are here to help you if you have any questions at all or you need help buying property. This week I'm going to give you a national house price roundup featuring the latest from Melbourne, Sydney, Brisbane, the ACT, Adelaide, Perth and Darwin. You can jump to each particular section that you're interested in if you don't want to watch the whole programme. First of all, a note to everyone out there before we get started. We always like to remind everyone that Australia is not one big property market. That would be like saying that every share on the stock market is the same and performs the same. So unsurprisingly, Australia's capital cities have had quite mixed results from the fallout of COVID-19, with some benefiting and others struggling. Even within the cities, there are markets within markets. It's dangerous to sweep every single suburb within a city into the same bucket. There are a number of factors, both health and economic, which are driving the different markets in different directions. As most of us out there know who are watching the property markets, the coronavirus situation in Victoria is having an impact on some property markets and the level of sales volumes occurring. Because Victoria accounts for around 1/4 of the nation's economy, the stage 4 lockdown has already dampened both consumer and business sentiment. Obviously, cities where labour markets are more impacted are also likely to be more affected to some degree in the short term. It is important to remember that Australia's fundamentals in a post-COVID-19 period remain strong in comparison with the rest of the world, and an investment property today will prove successful over the medium to long term. Your property location research is one of the most important things that you need to do when buying property. Click on this link up here, and I've also put the link in the description below to listen to some of those key questions that you need to ask when you're doing your due diligence. And let's get started. Melbourne is currently facing a number of challenges brought on by the COVID-19 crisis. Demand for property remains relatively solid, but as Melbourne pre-pandemic had the highest level of net overseas migration of all the capital city markets, the closure of international borders will have some effect in the short term. According to ABS data, Victoria has also seen the largest decline in payroll jobs of the states and territories. The Melbourne market is remaining pretty resilient amid the second wave of coronavirus. The property market overall has also managed to hold its own during the economic downturn, with prices remaining largely steady despite a drop in transaction numbers. The Real Estate Institute of Victoria's latest figures show that the market overall is actually in better shape than it was at the same time in 2019. There are reports that the median house price for the Melbourne metropolitan area dropped 3.5% in the June quarter, but we do need to remember that it remained 6.1% higher than the same time last year, because the previous 4 quarters delivered price growth. In Melbourne's middle ring suburbs, the median house price was 9.4% higher than it was in June 2019, and the median unit price was up 6.4% over that same period. The monthly rider report shows that Melbourne is struggling, but hanging on in there fairly well. With reference to there being markets within markets, the median house price for Melbourne dropped in the June quarter, as we've just reported, but figures reveal there was still a number of individual regions within the Melbourne area that recorded price growth. As said before, Melbourne's median house price was down by 3.5% when you lump everything into one bucket. However, figures from Domain reveal Melbourne's more affordable suburbs were the ones which continued to record price growth during that June quarter. Median house prices in Melbourne's northwest region increased by 3.1% during the June quarter to reach $656,000, while the median in the Mornington Peninsula, for example, increased by 2.8% to reach $740,000. Suburbs in the west of the metropolitan area also recorded a median house price increase of 2.5% to $620,000, and those within the east recorded an increase of 0.3% to $795,000. While Sydney is still showing a high level of resistance against any property downturns, the city is generally finding it increasingly difficult to withstand the negative impacts of the pandemic. It has been hit by the shutdown of international tourism and overseas migration. As we have reported in previous weeks, this is particularly evident in the rental market, with vacancies rising and rents falling in many locations. These are most notably in the inner city ring areas. Sales prices remain higher than a year ago in most parts of the Sydney metropolitan area, but there has been a small-scale gradual decline in recent months in some areas. In a sign of confidence that the COVID-induced economic downturn will turn around at some stage, property developers are moving ahead with office, residential and retail projects within the city. On the whole, though, much of the Sydney real estate market has defied the doomsayers. Despite some decline in recent months, the city has achieved double-digit price growth in the past 12 months. Prices have remained resilient despite increased unemployment levels and significant residential vacancies in those inner city locations. Brisbane was poised for growth in early 2020 and is now emerging strongly from the COVID-19 shutdown phase with its prospects intact. The key element set to drive the Brisbane economy and property market is infrastructure spending. Brisbane did not experience the property booms that happened in Melbourne and in Sydney from around 2013 to around 2018, and the fundamental difference was that level of infrastructure projects. Both Melbourne and Sydney had been spending massively on infrastructure, while Brisbane was spending very little. This is now changing, and there are multiple projects underway across the Brisbane area, with more in the planning pipeline. The need by federal and state governments to stimulate economies by fast-tracking infrastructure spending will enhance the busy construction phase Brisbane is entering. Multi-billion-dollar infrastructure projects are big generators of economic activity and employment, while adding to the appeal of the city. This tends to translate into stronger demand for homes. And right now, Brisbane is relatively virus-free and local economies continue to steadily reopen. Queensland's economy as a whole is performing better in key areas such as retail sales and jobs growth than some southern states battling coronavirus lockdowns. Brisbane also benefits from the affordability comparison with the bigger cities. We would also note that the exodus to affordable lifestyle is one of those overriding trends in Australian real estate, and southeast Queensland is the national leader on population growth from interstate migration. All these facts suggest that Brisbane is approaching a period of sustained growth in its real estate markets. The ACT has seen property values increase 1.3% since March. It has a strong COVID-resistant economy, home buyer incentives and business recovery programs. The ACT market was performing well before the pandemic, with solid price growth, strong rental growth and good employment figures. We would forecast that it is poised to continue doing so, while other capital cities may struggle a little bit more. While in itself not particularly diverse, almost half of Canberra's working population is employed in the government sector, obviously. The national economic downturn has not had as big an impact there as in other regions. The rental market is strong, with Canberra recording the highest rents for houses in Australia and the second highest for units. This is against a background of low vacancies, big stamp duty reductions to keep residential buildings firing, alongside the home builder grant and incentives for first home buyers. These are all likely to keep the property market ticking over. Adelaide's resistance to the forces of COVID-19 is shown by the number of suburbs with sales growth and the number with annual uplift in their median prices. Adelaide is delivering on its reputation for steadiness, notwithstanding the negative forces of COVID-19. Adelaide and South Australia have handled the pandemic better in health terms than any other state, and its economy has shown resilience. This has been reflected in its real estate markets. Along with Hobart and Canberra, it was one of only 3 major cities to record house price growth over our June quarter. According to Domain, this pushed the city's median house price to a record high of $553,000. While it was a modest 0.2% lift, this is a better outcome than other capital cities that, of course, declined, reinforcing the stability of the Adelaide housing market, even amid the economic fallout of COVID-19. Confidence in the state's property sector is also bouncing back faster than in the rest of the country, according to the latest ANZ Property Council survey of the industry. South Australian respondents were the most optimistic about a short-term recovery, with 68% expecting things to improve over the next 3 months. For some, it may be surprising to hear that the Perth market has shown greater resistance to the pandemic impact than most Australian markets, in terms of sales activity, definitely. But it does continue to be weak on price performance. For those of us that follow the property markets very closely, this has been a recurring theme for the Perth property market. Sales activity levels have been solid for the past 2 years, but the city doesn't seem to be able to get past the downturn of the past 6 years. There seems to be an ongoing lack of confidence in the Perth economy and its property markets. And of course, COVID-19 hasn't helped. The Ryder Report's analysis shows that only 27% of Perth suburbs have recorded annual growth in their median prices, which means that almost 3/4 of the city's suburbs still have falling prices. On the other hand, the result in terms of market demand has been quite positive. In fact, more so than in Melbourne, Sydney or Brisbane. Now, given that Perth has handled the pandemic better than these bigger cities and the state economy is showing signs of growth, we would expect this to continue. WA seemed to be on the verge of an economic revival before the pandemic struck, with accelerating population growth and a resources sector revving back into top gear. The Commonwealth Bank's quarterly ranking of the relative economic performance of all states and territories still has WA in 7th position. But the data also revealed that WA recorded the nation's fastest nominal economic growth, up 13.1% in the year to March. In Darwin, a weak local economy leading to population loss has been the big dilemma. Price data published by SQM Research late July showed that Darwin is the only capital city with house prices lower than a year ago, continuing a trend that has persisted for a number of years. The NT continues to rank last among the states and territories in the State of the States report, which was published by CommSec in July. The territory is ranked 5th on relative economic strength and 6th on employment, but is last on the other 6 indicators. Perhaps the most positive data pointing to better times for the Darwin market is the trend with vacancies. A year ago, the city's vacancy rate was above 3%, having been high for several years. But by May 2020, it was down to 2.3%, and in June, according to SQM Research, it improved to 1.8%. SQM's rental data published in July found that Darwin rents rose in July. CoreLogic also suggests a small rise in rents in the June quarter. As we've said before, it is very important to remember that Australia's fundamentals in a post-COVID-19 period remain strong in comparison with the rest of the world, and an investment today should prove successful over the medium to long term. Please subscribe to our YouTube channel so that you don't miss out on our area reports, our free webinars, and our further news updates. Leave me a comment below and let us know if you have any questions or concerns or anything at all about your property buying. Please check out our website for more details on our services and how our advisors and buyers agents can help you. And I will see you soon. Bye.